All right, good morning, guys. Welcome back to FX Fabric. It's been long you heard from me. Yeah, due to the volatility in the elections which are coming up, actually today, as I'm recording this video. Today is the 5th. From my time, we are around 10 hours away from US elections. Yeah, let's look at what the market looks like. I wouldn't recommend you guys to trade today, but if you feel your hands can't get off the market, well, then watch this video. Okay, from the weekly, let's begin from the weekly. This is gold we are looking at, and as you can see on the weekly, last week we had a negative, a red candle, as you can see. Uh, we first tested the highs. We actually blew out of the highs last week, but you can see how it got rejected immediately, and the candle closed within the previous week. You can see, and look at the volume bar. You can see how much red we have here, which just shows you a lot of sellers stepped in last week, and they pushed the market back down. But as you understand, the market never moves up just like that, like 1 2 3 10 candles. It's just moving up. It always takes a retracement. It always takes a rest, guys. Okay, so on from the daily, let's look at this. And from the daily, as you can see, I don't need to throw trend lines here, guys, because as you can see, this is a clear uptrend. And let me see, do I have one with trend lines? I think so. Okay. Yep. As you guys can see, you can see we have our trend lines here. You can see the purple trend line here, and then the green trend line. So and also you can see our support and resistance levels. Actually, there is supposed to be one here, but as you can see, the market is on a very aggressive uptrend. And in the previous uptrend, after this retracement, how many candles? If you watched my last video, we counted how many candles here. 1 2 3 4 5 6 7 8 9, almost 10 candles. And if you see such an extended trend, you should always expect any form of retracement for the market to come back and retrace, and at least take a rest. It retraced one candle, one daily candle, but it failed to finish up the retracement and continued upwards with how many days? 1 2 3 4 5 more days. And after that, that is when it massively dropped to come back and retest these levels below here. You see? Okay, so let's move on to the 4-hour time frame. And on the 4-hour time frame, you can see this clearly. The market played around this area for quite long. Remember, guys, we took off a few trades from here. There was a gap which was formed here. We took a trade here and here, and then we missed this trade actually to the top. We never anticipated that it's going to continue to the highs. But as you know, in any uptrend, don't just expect the market to, don't look out for sales, because you never know where it's going to turn around, first of all, and never know till when, till where is it going to retrace. You understand? So if in any uptrend, guys, stop looking for sales and only look out for buys. You see, if you can't find a sell here and you see it's still a strong uptrend, stay away. It's not only one market to trade. Don't stick on gold. You understand? And when the market resumes with the uptrend, then you can come back and look for the buys. But guys, do not look out for sales in a market which is not a selling market. You understand? Unless it's entered a range, and there are different tactics of trading ranges. And in a range, you can buy and sell at the same time. Well, no, of course not at the same time, but you can buy, go to the top, and then when it reaches the top, you sell, come back to the bottom with tight stop losses. You see this line you see here, this curve you see, I use the 100 EMA, and I like it a lot because if you can see how many times it's respected it, guys, you can see how many times it respected it. So once it crosses it, I'm looking out for price action, trend lines, to see is there confirmation to the buy. Right now, gold is not good to buy. I would wait for it to either bounce off this 100 EMA. You can see most people actually use the 200 EMA, but the 200 EMA comes in quite late. So if I see already market reacting to the 100 EMA, I just wait for confirmation and then I buy, you see. But I would actually be patient enough to wait for this market to come back and touch this line. And if we look carefully, how many times have we touched this line? Once, twice, 3 times. The 4th time, there is even a possibility on the 4th time to break through it and come back and still test this line. But anyway, guys, I'm not a prophet, but this is just market analysis and price action. But for today, the market is going to play around this. You can see this support area. You can see it. Yeah, it's going to play around this area for some time before it either takes up to the top or it comes to test this line. You see, so watch out for the price action here, guys. On the 1 hour time frame, there is nothing very interesting here. You can see the lines I drew here. It's just cutting through them like butter. Why? Because the market is falling and it's retracing. If you understand, guys, from the higher time frame that we are in a retracement, we are not in a down. Well, if you go on a lower time frame, it's a downtrend. But if you go on a higher time frame and you understand what's going on with gold, this is a retracement which may come to test these lows here. As you can see, guys, we may come to test these lows here, and by the time we test these lows, we may already be here. You see, we may already be here, which is by Friday of this week. So guys, be careful with gold. And today we have the whole of this week. I wouldn't advise anybody to trade because of the elections. You could sit it out. If you've made some money, if you have other things to do, go to the gym, like work out, go with your guys, have fun with them, and maybe you can even have fun with the market. Just sit and watch and see. Why am I saying so? All of this time, if you open the graph and see, count how many gaps are you seeing in gold, you'll be surprised how many gaps you will see. And when gaps start to appear so like very often, that is not a good sign. It's a sign of a lot of volatility, a lot of money injections. You see, these guys, they do what we call the liquidity injections into the market. Why? Due to uncertainty, because of course, trading. I mean, because of elections. Look at this gap here. Look at this gap here. Gold is not a market which gets a lot of gaps. Look at this gap here. You can see, guys. You can see. So there are many gaps which are coming up. Look at this gap here, and they are not so good. Especially they create a lot of volatility. Not volatility, but I can call it indecision in the market. You can see, right? So if you look carefully, actually this is our previous high, and on a bigger time frame, somebody can even call this a what? A head and shoulder. You can see. But how many candles do we have here forming this head and shoulder? If it's more than 100, let me see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57, 58, 59, 60, 61, 62, 63, 64, 65, 66, 67, 68. Yeah, it is still a valid head and shoulder, and we may expect market to come back, bounce off this area here, and come and touch this place here. It's very possible. Yeah. You saw what I was counting, guys. When you have a head and shoulder pattern and a double top or a double bottom pattern, an M pattern, right? In a head and shoulder, if you have more than 100 bars, that head and shoulder is not it's not valid anymore because it's extended, and the more it gets extended, the more it loses its significance. The same, not the same applies, but a similar component is also with a double bottom pattern. If you see a double bottom, this can be a double bottom, you can see guys, here and here. If you count more than 30 candles here in a double bottom pattern from the beginning to the end of its formation, let's see here, let's check it well. What does the 1 hour look like? You see exactly, look at it. And how do you trade double bottoms? You mark out the neckline, and where the neckline touches from beginning to end, you count those candles. 1 2 3 4 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18. Well, if you look at because this pattern was formed on the 4-hour time frame, let's see. Sorry. Okay. Yeah, and if you look closely here, 1 2 3 4 5 6 7 8 9 10 11 12. Here it's 12. On the 1-hour time frame, it's close to 30. It is a valid M pattern, you understand. And for the M pattern, you start from the neck up to up to the head at the bottom. You can see from here up to here. Count how many pips you have there. Here we have how many? Let me see. Yeah, we have 21 points, as you can see guys. 20 points, let's say. And then you count the same distance from the neck to the top, 20 points, and that is your target, you see. So somebody could have taken this trade from here up to here, very fast trade, and you're out, you see. That is one of the strategies I can teach you. But anyway, that is gold for you guys today. Let's look at another market, not waste any time. US 100, and let's see guys, leave some comments there. Who made money off last week, money off this move? Who caught this fall? Actually, this happened after NFP came out, and I posted a few trades last week. We made some money off the NFP, and the figures came out. We thought they are all coming out positive. Sorry, they are all coming out negative, and they surprised us. And that is why you see most of the markets had a fall because the US dollar was doing good. Yeah. Okay, so for US 100, please go and visit my previous videos. You will see the strategy I use in trading US 100. US 100 moves from zone to zone. As I explained to you guys, you have to follow it from, let's see, from here. You can see it moves from one zone to another, rests there, and uses that previous resistance as support. It moves, takes off, creates another support, and it respects it for quite some time. It takes off again. It creates that previous area. You can see here. It creates that previous area which it uses as support, takes off, and continues like that. You can see. I don't think we need this line. Sorry. Let's take it off. Okay. And okay. So that is how mainly US 100 moves. Let's move on to the daily and see. On the weekly, you can see guys that last week this was anticipated. Look at how much volatility in this market was reducing all along. You can see the volume of trading here was reducing all along till we formed this spinning top up here, and then we formed a massive bearish engulfing candle. That is on the weekly. That was last week. And after this massive bearish engulfing candle, guys, be careful. Stop looking for buys here, because this area has tested it once. This is the second time it's rejecting it. You see, so there is a possibility of this guy to come here, this candle, by the end of this week to be around here. You can see guys. Okay, let's look at how it looks on the daily. And on the daily, okay, yeah, on the daily we are still having something similar. You can see guys, generally it's an uptrend. So as I told you guys, this week I would stay away from the market and let it play its game. due to the volatility, which is the uncertainty, I can say, which is going to happen due to elections. We don't know who is going to win. We all thought Trump is going to just sweep this election, but Kamala Harris is coming in, has some good results from the preliminary elections, and now today the full election is going to take place. So nobody is really sure who is going to win, guys. So be careful. Don't just rush into the market. I would stay away from it. You see, okay, and from the daily time frame, as you can see, we have two previous massive bearish candles. I wouldn't look for buys. You see, I would wait for this market at least to come and reach this level. You can see how it's tested this level, and by the time it reaches this level, it's touching our 100 EMA. You can see, but that doesn't guarantee that it will reject that EMA. It can just break through like here and come back and test these demand zones around here. You can see this zone here. You see, we can test that zone or come all the way and test this zone here. You see, so our zones of interest, let's mark them out so that when the market comes around those areas, we know we are very careful to look out what it will do. You understand? Where is the sell before the buy? I think let me go to the 4 hours. It's better there because we shall get a massive zone here which will mislead us. Okay, two areas we are looking at. We are looking at this area here. We are looking at this area here. Oh, it's red. I need to make it blue. Okay, so guys, this is the area we are looking at. This is the first one. For the market to bounce off, you see. Sorry, this is red. Let's make it blue because red is normally a supply zone, but you know, demand zones, they're either marked green or blue, but I prefer blue. So wait, why? Okay, just a minute, guys. Okay, I need to change the shade of okay, sorry, I was perfect. We made it blue. Let's okay, let's clone it and also mark this other zone here, as you can see. So guys, look at this zone here. You can see there is this area which had acted as the support. You can see it. But why won't I consider it? And let me show you the area I'll consider. I'll consider this area because market, especially US, these indices, US 100, when they are moving, they always take out liquidity from the top and bottom. You understand? Why is it moving? Okay, so I wouldn't consider the one above. No, I will consider the one above as a what? A support. You see, so if it rejects this area completely as a support and takes off to the top, we are in. But I will be very careful and look out for this supply zone, demand zone around this area, because this is already a demand zone. Okay, you can see, guys, this demand zone around this area, I would look out for it. Because why is it so enticing for the market? Because the market and the big banks, they all know that everybody is looking at this support area. Now when the market comes, what areas are we looking at? We are looking at this area here, where the market is right now. We are looking at this area. This is the first area we are looking at for a rejection. The second area is this one. But this area here, why it's so interesting is just below it is a demand zone. So which means that when the market comes here, it will be a hunting zone. So the market will pretend as if it's getting rejected off here, and then it will come and touch this demand zone, taking out all the stops which have been left around this area, right around before into the demand zone here. So the best thing, if the market really comes and approaches this area, I would be very careful and watch, not get into the market before it comes and touches into this demand zone. You can see. And of course, if it crosses it and comes and decides to come and test this trend line, then we are looking for this demand zone around this area. Okay, so that is it, guys. Be dynamic, include all strategies, of course not all of them at once, but use all of them and at your advantage. Support, you can see the difference between support and resistance in demand and supply zones. Sometimes demand and supply zones can coincide with support and resistance, but not always. As you can see here, we identify a support and resistance, a support line here, and right below it is a demand zone. So this creates a perfect hunting, stop loss hunting zone, you can see. Okay, so guys, prediction here is that this guy is still falling and it will come to test this zone here. Watch out how it reacts from this support zone. If it fails to get rejected off it, the next zone we are looking at is this one, and the next one is here. But I wouldn't sell in this market. I would stay away from it due to the fact that we are in election week, and it's always unpredictable. You see, US 30. Let's move on to US 30 and see how it looks like. And all these indices, sorry, futures. Yeah, as you can see, the same thing. Should I go to the weekly? I don't think so, because it's similar to what happened in US 100. It has had this retracement for some time. Since when? Since 21st of October. Today is the 5th. So it's been in this retracement for some time. And here you can scalp it and sell. Yeah. Actually, last time we sold here, we sold also here. We made a few bucks from it. And as you can see, guys, you can decide to draw a few trend lines here, but this guy will surprise you. Let's see here. Does it respect these trend lines here? If you look carefully, yeah, it broke through it. You can see it has blown through it, and you see, broke through it here, came back to retest here, and then continued downwards. So this market here, as you can see, this area has been disrespected. So we can expect the next level to be this one. And as you can see, guys, as I always tell you, support and resistance areas sometimes coincide, but sometimes they are specially made so that they are right below or above the supply zones or demand zones. For example, look at this area. This is a support area. You can see it. How many times did it get rejected? Once, twice, 3 times, and the market took off. But right below it is a demand zone. You can see how these guys were feeding into get into the buys. So when the market reaches here, I would watch out for this zone that I expect the market to come and get rejected off the first time, and the next time it comes, there is a possibility of it taking out the stops around this area and start stop hunting into this demand zone around here before it takes off. You can see, actually we can draw it here. Where are we? Okay, you can see this area here. So my stop loss will be right below this demand zone. Why? Because the market, when it comes to this area, it will surprise you. It will get rejected first from the support, and then when it comes the second time, it will take out whoever left the stops there into the demand zone before it takes off. You see, so these are areas we are looking at. This trend line has been broken, so there is no reason this market should turn around here after like breaking through this trend line. So so US 30 may still continue to fall for some time. How long has it been falling? Let me see. For more than 10 days. There is a possibility of it continuing in the uptrend. But guys, price action is key. It's always the king. Before we get a change in character, and what is a change in character? Before our new high breaks through the previous lower high. This is our lower high here. Let me mark it out. You can see this is our previous lower high. So before we break through it and form a higher low, not a lower low here, before we break through it, we form a higher high and a higher low here, forming a change in character. There are no buys, guys. Stop wasting your time. Unless you are scalping and you are in and out quite fast, yes, you can trade that. You see, somebody, for example, could have taken a buy from here up to this support here, and you can see how the market got rejected off it immediately. But before you get a change in character here, guys, stop lying to yourself. There are no buys here, or you are just scalping. That is it. Okay, so that is US30 for you. As I told you, because of the elections, I won't be trading this week. And if you need mentorship, guys, reach out to me. We can talk. I can take you through all these topics: supply and demand, support and resistance, fake breakouts, what else, market maker models, and things which can help you to actually trading gaps too, because you can see these gaps here. There are different tactics of trading gaps. There are different types of gaps: breakaway gaps. We have exhaustion gaps. You see, gaps which happen inside a trend. You see, and how those gaps get filled and how to trade them, where to put the stop loss. You see, trend lines, of course, it's a different area. People think they know how to trade trend lines. It's the easiest method of trading, but there are different ways of placing trend lines. Not different, actually. I can say there are different types of trend lines: major trend lines, minor trend lines, and inner and outer trend lines. You can see, and they can all face different directions. It depends on how you see it, how you follow it. You see. So if you see somebody draw a trend line you don't understand, don't think they don't know what they are doing. If you find an expert, you'll be surprised. They'll have one line which you don't understand, and the way the market will respect it, yeah, it will surprise you. So guys, if you need mentorship, reach out to me. I charge a very small fee, and yeah, let's get trading. Don't forget to subscribe and click the like button, and also don't forget to check out my channel description. You'll find my Telegram channel there, the link to my Telegram. So go ahead, shoot me a message on Telegram or sign up to our Telegram channel, and you'll have signals, free signals, sniper entries from which you can make some bucks off. Okay, so guys, nice trading week. As I advise you, don't trade this week, stay away from it. But if your hands can't get away from trading, be very careful. Don't place very tight stops. Give your market a breathing space because of the volatility and uncertainty due to the elections. Okay, so guys, be safe out there. Don't get the market to take your money. Okay, have a nice week. Bye bye.